So good morning to all that are joining us. I'm Mark Sharpley, for those who don't know me. What we're doing today is a discussion about success stories and otherwise in the coronavirus period. And it's really an opportunity to explore different businesses and see what their views are. This one is going to be more positive than negative, but we've got the recent news overnight, which might not want one or two people's views back. The four guests today are Gary Parker, who's the Managing Director of Integra Buildings. He'll talk us about his business and their experience over the last few months and how they see the future. Secondly, we've got Andy Barber. Wave to us, Andy, from the Smailes Foundation as the CEO. In their sector, it's the charity sector, but they are also affected both positively and negatively as part of this coronavirus. And so he's going to give us the benefit of his experiences. Thirdly, our own Pete Deering, who many of you will know. He's going to run through various issues that a lot of our clients will be facing that create stress of a financial nature and the ways that we see as a possible coping strategy. And last but not least, Andrew MacKenzie, who many of you will know is a resident partner in Hull of Begbies Traynor. Andrew will be looking at options available to all types of business, both good and bad, as this crisis unfolds, and talk to us through many of the issues that we have faced and some of the solutions that they can offer. And for regular attendees of the webinars, you'll be aware that they are scheduled for a 45-minute session. We'll try to matters to close towards that point. I would, however, welcome any Q&As. You can do on the Q&A button at the bottom of your screen. Please feel free to put whatever you like. You can anonymise it in case you read about us. We are friendly, and we'd like to get some discussion going as we go through the webinar. So without any further ado, I'd like to hand over to Gary and go through what he has to tell us, and we'll catch up with you all in a few minutes. Thank you.
Good morning. Just a bit of an introduction and a brief overview. I'm Gary Parker, Managing Director of Integra Buildings. We started with a handful of people in 1997 in a small factory in Beverley. In just a few years, we outgrew and purchased larger premises in Bearswick. In 2007, we purchased a second factory in Paul to enable us to set up the steel anti-vandal side of our business. In 2018, we consolidated both sites by purchasing a neighbouring site at Paul. We manufactured a new head office, modular of course, which formed part of the £3 million investment. Over the last 22 years, we have grown to a £30 million business today. We are a modular building manufacturer. This includes all elements of design, manufacture, delivery and installation. In addition to modular buildings, we are also a manufacturer of steel anti-vandal units. We provide buildings to a wide range of sectors, including education, sports and leisure, healthcare and commercial. We work directly with end clients, offering full turnkey solutions, as well as major construction and tier one companies providing modular buildings as part of much larger projects. We are just about to complete the purchase of 5 acres of land neighbouring our current facility, which will future-proof the site and give us the flexibility to continue our growth with more space and, in long term, a further manufacturing facility. We are forecasting to double our turnover in the next 3 years to 60 million. We are currently recruiting several positions and have 6 new apprentices starting with us next month. We're looking forward to continuing to take on challenging and exciting projects that push the boundaries of modular construction. Focusing on lessons learned from the last recession. Communicating well with our workforce being key in appeasing fears and concerns and keeping people productive and motivated. As with the recession of 2008, this is certainly no certainty. I find that open communication and positivity is the best way forward to address this. I also value professional advice from our wider team, including external resources such as accountants and business advisors. Throughout our trading history, we have always been very prudent with holding good cash reserves, both for cash flow and future investment, but also as a rainy day fund, and this remains today. Having plenty of reserves in the bank enables us to take opportunities when they present. It also ensures cash flow is covered during busy and difficult times and has given assurances and comfort to our clients, suppliers and workforce. Our financial standing plays a big part when tendering for projects. Over the years, we have developed fantastic relationships with many of our suppliers. I feel we have made significant inroads, and without them, we wouldn't be able to continue in this COVID times with any projects. Good communication with our supply chain is also fundamental. All of our directors, including myself, have always been very hands-on and regularly speak with suppliers and subcontractors. Again, I don't underestimate the impact this has had as materials became short in supply. During the lockdown, we had to call upon many of the suppliers, several of them who taken the decision to temporarily shut down during lockdown. We asked them to reopen as we was working on essential projects. We were asked by the government to continue, and thankfully, due to such good relationships, they did so, and we were able to continue and deliver our projects. In the early years, where we were more of a trade supplier to hire and construction companies, we learned during the last recession that being on frameworks could secure work from different sources. Councils and government frameworks have now provided us with a significant amount of work over the years, especially during recessions. Looking at the actions we have taken throughout lockdown. Throughout COVID, we have been informative, decisive, and kept lines of communication. We wrote to all our clients with current and forthcoming orders and made them aware of what potential impacts were anticipated and how we intend to deal with these. We felt this was important, and most of our clients are understanding. At the end of the day, we're all in this together. We inserted COVID clauses within our contracts, and they will remain for future. Through the lockdown period, we are able to arrange for all our office staff to work remotely from home. I continue to go into the office every day, leading from the front to support our production teams who kept working throughout lockdown, with a range of new measures introduced. At the time, we are in the middle of building a large NHS project, which was critical. We also had a number of key projects for schools, which were desperately needed, even more so knowing that distancing would be a requirement when schools return. I also found that being understanding and flexible staff helped. Everyone was coping with the different ways whilst working from home, balancing work and daily family challenges. In terms of the outcomes of COVID, introducing Teams meetings has meant we can now introduce our wider project team to the client and project earlier, which has not only made improvements to the development of the projects, but also cut down journey times for key staff. We are experiencing better than ever relationships with suppliers and subcontractors. We have been so fortunate to have an incredible supply chain that has ensured we can continue to deliver projects. We have a very promising outlook for the future. We continue to push hard on the sales front. We have a very healthy order book and are fortunate to have a great number of repeat clients. I'd like to summarise. Taking the positives from this year, we have improved our turnover year to date on last year. We have a great outlook to the future in terms of orders and are looking forward to actioning our expansion plans. However, we are mindful of the challenging situation that is affecting the whole world, and we're thankful to such an amazing staff and our supporting supply chain, and we'd like to support them back in the future. Thank you.
Thanks, Gary. That's brilliant. I think it's been a testament to your endeavours by the sound of it, and thanks for sharing that with us. And now we go over to a slightly different sector. We go over to Andy Barber to give us some idea about their problems and how they've been dealing with it. Thanks, Andy.
Good morning, all. First off, I'm going to start off by saying go easy on me. It's my birthday today. I should really be celebrating, but nobody's in the house, just me and the dog. So I wanted to join you all today. I think, as many of you know, looking at the invite list and the colleagues around the table, you know, the charitable sector has faced, as most sectors, a very difficult period of time, and the reaction has been outstanding. From a Smailes Foundation perspective, as many of you will know, we started from a small acorns 11 years ago in a recession. With just a laptop, myself, and £14,000 from Jim Dick, who's currently the High Sheriff of East Riding. fast forward 11 years and coming forward into coronavirus, and everything that we've learned and all the supporters that we've had helped us to have a fantastic response to coronavirus here in Hull and East Riding. We set up all the 9 community hubs across the East Riding, supporting all of the shielded residents across the area, ensuring that everybody got what they needed through the period of time. We supported over 2,500 volunteers. We brought in a whole host of corporate resources, and I'm really delighted to say that in just 3 weeks, in the first period of shutdown, we brought in £500,000 to distribute to small local charities within our communities. And the big part of that was around the trust and relationships that we'd built over those 11 years. That £500,000 has gone out to over 90 charitable organisations within our communities. It's been delivered both with financial reward for those individuals to continue to do what they're doing through COVID, but also to help them to sustain themselves in a very difficult period of time, whether it's a village hall needing more additional PPE to look at how they can bring people back into work, or supporting some financial roles and posts for people who are delivering that COVID response. But right the way throughout Smailes Foundation's delivery for the last 11 years, a big focus for me has been about how we celebrate our wow, not our woe. It's a big thing that I say in a lot of presentations that I have, and now more than ever, that's so imperative, to how we approach the challenges that we have now. Within the charitable sector, we have some serious issues around mission drift. So our organisations are responding to COVID and applying for funding that's available because of that COVID response, but losing sight of some of their core objectives as they search for that funding that can keep the organisation secure and safe and moving forward. I would stress it's not the ideal situation for people to move towards, and the key things to be able to limit that effect is making sure you go back to that strong governance structure and looking at who you are and why you were set up and what the most important things and what makes you unique and different and the difference that you can make. The other thing is leadership. One of the best things that we've set up with Smailes Goldie as a partner is our Trustee Academy. The strongest charities through coronavirus so far, and those that are thriving in the environment to support more and more individuals, has been those that have had the strongest trustee structures. So it comes back to what Gary's just suggested there, and what I'm sure everybody else around the table will say, that strong leadership and that governance, and knowing what journey you're already on, and maintaining, making some changes and making some tweaks to the approach, but maintaining on that same journey. And the other element, as Gary touched on as well, for me, is strong communication. How do we communicate with our donors, and how do we make sure that all of our supporters are understanding of our tough times that we've got at the moment, but how we're approaching them positively, and the difference that you as individual business organisations or supporters can help them to move. The big thing is making tough decisions quicker and making those decisions easier. And that's going back to that leadership and the trustees. What I'd ask all of you that are on the call today is, I'm looking at the attendance list, and the majority of you I recognise, I'm sure, have invested into charitable organisations, both with your time, with fundraising, and also your skill sets through your trustees and trusteeship. What I'd ask you to do is think back to what we did in the recession and what Smile flourished in those early stages, which is not to think of charities constantly asking for funding, but look at the resources and the skills and the time that you've got and how you can invest those better into your community. It's very, very easy to send a donation and give that little bit of support, and we appreciate that so much. But what charities need now more than ever is your skills and expertise to help to steady that ship and see us through to the other side. We're in the very, very early stages of our challenges as a charitable sector as well. A lot of resources have been pumped into that response to coronavirus and to support organisations to get over, such as the furlough scheme and so on, obviously has a massive benefit to the charitable sector and people who are employing. What we've got on the horizon, though, is all of those funders that have been able to invest at this period of time have taken that money from somewhere. And at some point in time, they're going to have to tighten their reins. And that's where the next key message for me really comes into part. And it's something that myself as Chief Exec of Smile, my trustees, and also as an organisation as a whole and our supporters have talked about a hell of a lot. It's about partnerships, collaborations and mergers. Now is the time for us to massively look at how we can work better and smarter together. Most recently, we just worked with Hull Youth Support Trust a fantastic charity that was performing incredibly well, but was at a stage of its development where if it wasn't to move forward, it would be moving backward. What we could offer it as Smile Foundation, with 23 startup businesses in a building at 161 on High Street, is that ability to take that model and move it forward and stimulate not only the individual that was running that organisation, but also those businesses that are within it. What we're now looking at doing is expanding that provision across the East Riding as well. So we're looking at setting up a youth support trust in Goole and in Bridlington, which will see lots more startup businesses being given the opportunity to be in a safe and comfortable environment whilst also getting the advice and guidance. But the key thing for me is also from a charitable sector perspective, and any individuals listening to this from a charity, is to look after yourself first. What we've seen right the way through coronavirus is a whole host of charity volunteers and paid members of staff exhausting themselves through this situation in helping others. Myself personally and my team, working 15 to 20 hours a day in the first couple of weeks, really making that massive difference. But at the end of the day, that's going to come back and bite you at some point. We put in support for the well-being of charity leaders across the whole of East Riding, paying for well-being support for anybody that needs it, and that's still available. But a stronger you is a stronger organisation and is a stronger community. Some of the key messages to keep pushing is to keep it simple. Like I say, what difference are you really making, and how could you make that difference smarter, quicker, more efficient if you was working in partnership? But the key message for me is, as what Gary's touched on as well, is there's a whole host of opportunities here. You know, things like this for me bring up a positive opportunity for us as well to look at ourselves, look at our organisations, look at our communities. How can we do things differently? And the last example I'll give for that is volunteering. Volunteering has been stale and boring for a long period of time. It's outstanding what it does and the difference that it makes. But what we showed through coronavirus was actually thousands of volunteers wanted to volunteer, and they showed us during coronavirus how they wanted to volunteer. WhatsApp, Facebook, that ability to do something quicker and easier and smarter. And that's where the voluntary sector has to move forward. We need to use these opportunities and the evidence to kind of change our models and move with the times and not look back. And as I say, just to finish again, the key factor for me is there's a whole host of challenges still to come for the voluntary sector. What you guys who are all on the call can do to help us is to think inside of your organisations and as an individual, and how best can you donate to a charity? Well, your skills, your time and your effort can do that. But just remember that charities have got a whole host of wow that they need to celebrate. And if you want to keep asking them to tell you the worst story, it's only going to cause us more problems. What we've got to show is what a difference we can make in a positive way, and how we can take the best out of this situation and move forward. And that's the biggest opportunity we've got. And I think this area is very well positioned to do it. Thank you.
Thanks, Andy. That's pretty inspirational, and it's good to see that the charity sector has risen to the challenge. And I think using IT and all that sort of stuff is key to it, isn't it? Okay, straight on to Pete Deering. Pete, you're going to tell us all about what your firm have been dealing with and the tricky points that we're dealing with. Over to you.
Brilliant. Thanks, Mark, and thanks, Andy, and thanks, Gary. I'm just going to talk about how to spot financial stress in your business, particularly at the minute, the times that we live in. Spotting stress, financial stress in your business early is key. Andrew MacKenzie, after myself, he'll be talking about potential things that you can do if things get on top of you in your business. But as I say, the key thing here is spotting signs early. So, it's a cliche, one that we've all heard countless times. Turnover is vanity, profit is sanity, but cash is king. Gary, in his piece earlier on, explained that throughout their business journey, they've now got to a point where they've got a cash reserve and they're able to leverage that to get better clients to ensure that they can keep the supply chain going. But Gary will have started, Integra will have started at the beginning with no cash. They've got to that point now. What do you do in your business if you haven't got the cash, and where do you look in your particular financial statements for stress? So what I'm going to talk about first off is where to spot signs of stress. The first one is by looking at your balance sheet. So it all relies on financial information, your debtors, your WIP, your cash and your liabilities. Secondly, I'm going to talk about where you spot things in your profit and loss account. And then lastly, I'm going to talk about other factors that you might consider that potentially are signs of financial stress in your business that don't necessarily come from the financial statements. So to begin with then, let's talk about debtors. So within your financial statements, obviously, you'll be showing your debtors, and something that you should be looking out for is what we call debtor days, and especially if debtor days are creeping upwards. Debtor days it's the average time that it takes a customer to pay you. Now, this is done by a calculation. If you want to know what that is, by all means ask me, but I won't bore you with the details. But by monitoring debtor days at set periods of time, you can spot trends. Now, it might be that the trend is that your debtor days are gradually increasing. Increasing debtor days means that your cash is tied up in your invoices and it's not in your bank account, it's potentially in somebody else's bank account. You need to sort of understand why the debtor days are creeping, particularly where we are at the current time. That might be because your customers are basically pushing the limits of their credit terms with you. They might be paying after 35 days rather than the 30 that they need to, just to help their cash flow. However, there might be other reasons that you need to investigate. For instance, if you've got a few invoices out there that have got disputes, one of the most common things I see is that an invoice goes out, the customer disputes it maybe after 20 days, and if you don't tackle that dispute early, it might be another 20, 30 days before they pay. So a customer who's potentially on 30 days credit has got 50 days credit just because you haven't handled that dispute early. So debtor days is definitely something, debtor days is something that you should be looking at. The next thing to do with debtors is looking at credit limits of your debtors. Now, as business owners, we manage risk on a day-to-day basis, and one of the risks is always giving credit to your customers. Now, if you are looking at that, you should be setting a level of credit that each of those customers has by potentially getting in touch with credit agencies, doing credit searches on them, and also making sure that you spread the debt amongst many customers. You don't want all of your eggs in one basket. If you look at your debtor list, you've got 500 grand, say's worth of debtors, and 450 of that is one particular client. You haven't spread your risk. So again, looking at credit limits and making sure that you manage your risk on your debtors is key. The next point I want to talk about is stock and work in progress. Now, stock and work in progress should be reviewed, particularly work in progress, so you can identify issues of excess expenditure which may not be currently showing in your margin or in your profit and loss account. Work in progress and stock at some point will turn into an invoice and therefore will turn into cash. But if there's something hiding in work in progress, such as an overrun or something that you've bought too expensive that's going to reduce your margin, in the future that will affect cash flow. So if you can spot any signs of problems in stock and work in progress early, you'll be ahead of the game and knowing whether you're going to have a cash flow problem. The next place to look, which is most obvious obviously when it comes to cash, is looking at your bank account, looking at peaks and troughs that you have during the month relating to cash flow. One common problem that we often see is with cash flow in companies is that you have money one day, but by the next it's gone, and it's understanding where that's gone. Now, if that is happening, it isn't necessarily an indication that there's anything wrong with your business. It might just be that the business is underfunded. You might need to talk to the banks, look at things like invoice financing, just things to get more funds into the coffers of the business to help you move forward. So we've talked about the assets on your balance sheet. The next thing to look at is liabilities. And in much the same way that I talked about looking at debtor days, you would also look at your creditors and look for creditor days. Now, you might be thinking, well, let's push our creditor days as much as possible so that we've got the money in our hands rather than our creditors' hands. But as Gary picked up on at the very beginning, and as he said that Integra are doing, is you've got to look after your supply chain, because at the end of the day, they're providing the ingredients, the components for your product. It doesn't help the entire supply chain if you're squeezing your suppliers. Eventually, that will affect your customers, and nobody's going to win there. One of the other sides with regards to liability is crown debt or HMRC debt. Everyone hates paying HMRC, obviously, but if you're frequently finding that there's a struggle each month to pay your PAYE, or every quarter paying your VAT, or every year paying your corporation tax, again, this is potentially a sign that, number one, the business might be underfunded. So again, looking at ways of potentially funding the business will be key there. The next liability that's most common for companies is financial debt, obviously. Like Crown debt, you might find that monthly debt repayments for term debt or hire purchases payments always becomes a struggle. Again, if you're struggling with this, there's solutions out there such as contacting the bank early, looking to potentially reschedule debt or negotiating payment holidays. The banks have been pretty good with that over the last few months with regards to coronavirus. So the key there is spotting the sign early and talking earlier. Communication, I know we've highlighted that on various sessions already this morning. The next place to look then is the profit and loss accounts of your financial statements. Falling margins is where I would look. Ask any entrepreneur, and as I've said at the very beginning, it doesn't matter what your sales are, it's all about what your profitability is. Nothing is sustainable if your margins are falling. You need to understand what margin you need to create a certain profit, because obviously profit and will lead to cash at some point. The next point to look at on your profit and loss account is your overheads. Look for increasing overheads. When a business is thriving, which most businesses were before lockdown, it's easy to get into a pattern of overspending. If money's in the bank, why not use it for investment, for marketing, for more stock? It's not necessarily a bad thing to increase overheads, but you just need to make sure that you're spending wisely. I did a session, you'll be able to find that on our website, a couple of months ago about waste management. It's not about looking at costs and saying, right, that's too high, let's cut it. It's about looking for waste in what you're spending. So we've covered the balance sheet, we've covered the profit and loss account. Just one non-financial point that I'd just like to mention, and again, that's been picked up on this morning, and that's general employee happiness in the business. If it all starts from the top, if there's stress from the top, you'll find that the employees become unhappy, and that is a sign that the business is under stress. So again, communicating with everybody in the business, make sure everybody's going in the same direction to achieve the same goal is key, and spotting any signs early again is key. So just to finish then, my main message really is with financial stress is even in the good times, you should be looking at the points that I've mentioned there, and particularly in the bad times you should be looking, because spotting the signs of problems early is key. The earlier you spot them, the more chance you'll be able to get help from either people like ourselves at Smailes Goldie or Andrew MacKenzie at Begbies, and that's just in time to pass back to Mark to hand on to Andy. Thank you.
Thanks, Pete. I think it's all a lesson that people have learned. I think it's being agile as well, I think, to add to that. People being more agile through this pandemic. So if things are going not according to plan, Andy, what happens next? What can you advise us all about?
Yeah, morning all, and thank you, Mark, Gary, Andy and Pete. I'm Andrew MacKenzie, for those who don't know me, partner at Begbies Traynor Group in Hull, Grimsby and Scunthorpe offices. Been around in Hull for just over 13 years now, remarkably. We're an advisory professional services firm who do everything from fundraising, due diligence, property, risk, forensic analysis, restructuring, and the dreaded insolvency. So we've got a full professional services offering for all business and sole traders' needs, really. 70+ offices in the UK, but very much focused on a local autonomous level with ourselves and our team in the Humber. What we have seen, we've managed okay, but obviously, as any firm, cash flow is critical, as Pete's touched on. So we've been looking at our cash flow, and whereas this year may look okay, you've got to look forward to next year and the year beyond, and that's having a firm control and an understanding of how your business works, and that is key in being able to adapt, as Mark has also mentioned too, along with Gary and Andy. You've got to be adaptable. You've got to understand your business, and that comes from, cash is king. Profit is a statement in time. You've got to understand what your cash requirements are, and there are very, very many ways to do that. And modelling is one of the the key things you can do, and having multiple cash flow models. They don't have to be complicated, but you can flex your cash flow for very, very different scenarios. And planning is hard at the moment. Planning is very hard, and you only see what's happened in the last 18 hours to understand that planning, we're in a unique position. We're in a recession. When are we going to come out of it? Is it 3 years? Is it 6 years? The data is mixed on the view, but we know that GDP is below our debt. We know that GDP may now fall again, not rise, due to what's happening with the urban sector, be it offices and bars and hotels, restaurants. The urban decay, it's been pronounced, and the hospitality bloodbath. But there are ways and there are positives coming out of this. We've recruited a guy called Mike Day from the asset-based lending sector, as Pete touched on, to come into our advisory team to advise people on working their assets, working with their lenders. So that's a positive that come out of it. People like Antler, Premier Inns, Virgin Atlantic, they've all shed jobs, but they've reacted in time and taken advice and difficult decisions early. Others, Shearing, Thomas Cook, Oasis, Monsoon, Go Outdoors, Riley's, they didn't react in time and they've been caught out. But what we can see, and particularly from a local level around the Humber, your online delivery services, your cyber security, we're very tech-based around the Humber, training, renewables, pharmaceuticals, caravans and staycations. I know multiple owners of cleaning firms, health and safety, foodstuffs, manufacturers. We are regionally very strong. So there should be positives coming out of that, but there are sectors that are going to suffer, and that's just reality. I think what we will have seen personally as well is the regeneration of the suburbs. Your niche players in your local area, they've made a comeback. Sort of the spirit of collaboration and togetherness is what's going to get everybody through this. The normal rules of competition are almost put to one side, and people have got to garner prosperity and positivity and focus. That's got to be focused on the leaders of the businesses, and filtering that down to your staff and the buy-in from the staff and all your stakeholders. But going back to, you must understand that all businesses face different scenarios. Therefore, they have to be prepared and have the right information. You need to speak to your advisors, your accountants, people like the Begbies Traynor group. People who can assist. The Humber LEP has been quite proactive throughout this period, and the Humber Business Growth Hub, they give grants for looking at cash flow and business modelling. And as Pete said, cash is king. It really is king, and understanding where your cash has been going. The government have done a lot, and the views will be mixed on how they've reacted. I won't give my personal views. But £100 billion has gone in since the start of this process. We are more heavily indebted than what our gross domestic product is, which is not great, and it can't go on forever. I mean, furlough, will it be extended? We don't know. If you've got a large staff on payroll, people should be consulting now if they need to make redundancies, because there are a certain period of time people have to give notice and consult over. So that should be done now with a view to the 31st of October. The C-bills and bounce back loans, there's been 50 to 60 million of that money come into the businesses. The application process is at the end of the month. So if you're going to look at one, you need to look at it sharply and quickly. Talk to your lender, talk to your advisor. It's not to say that if you miss that, you can't refinance anyway. But payments for C-bills and bounce back will come into play in 2021. So that's another pinch point. Court action has been stayed to the end of this month. So there's a lot happening at once for business, UK PLC, for want of a better word. I know people have to plan. Will it be extended? Who knows? But talk to your landlord, talk to your suppliers, talk to your customers. Your landlord can link your rents to profits. We've seen some quite high-profile cases in the retail market where they've gone through what's called a company voluntary arrangement, and they've linked their rents to profits. There are tools in the box, as long as you are prepared and act early enough. As Pete mentioned, HMRC, your VAT deferment, self-assessments, they fall due in the early part of 2021. talk to the HMRC, consider a time to pay. You need good financial information for a time to pay. The VAT rate is currently at 5% for hospitality. That ends in 2021. That sounds a bit of a stuck record. Everything ends in the next 3 months. But that is the reality we live in. What hasn't been mentioned so far is Crown Preference comes in 2020, 31st of December, whereby the Crown rank ahead of your floating charge and other creditors for their debt. That's going to have an impact on people's ability to lend on what's called floating charge assets. So that needs to be planned for. It's all about communication and understanding your business. Hopefully business, with all the right advice and taking into account what's available, can weather the pandemic, restructure, or even flourish, given the sectors I've discussed before, particularly in the Humber region. There are funders out there willing to lend if businesses can demonstrate viability, and viability is the key word. We're still seeing people wanting to acquire, people wanting to dispose. Is that going to be an accelerated process through accelerated M&A? There is a market designed to undertake those kind of transactions. Not your usual lengthy due diligence. There are markets so you can acquire a business and sell a business very quickly. Moving on to more of what the other side of the Begbies Traynor Group does and can help businesses with, and on a positive note too, the government pushed through the Corporate Insolvency Governance Act 2020 very, very quickly in June of this year in a response to COVID. It had been in Parliament in the consultation period for about 4 years, and it was accelerated really from the demise of the likes of Carillion, as people predicted a fall in customers, demand and supply delays, and resultant cash flow issues. So that was pushed through very quickly and became statute in June 2020. So they brought in a couple of procedures. The first one was the moratorium procedure. It's a freestanding moratorium procedure. That's also available on administration, but this is freestanding. Where a director, if the company can prove to be viable, to give it breathing space, with a filing at court, can get 20-day business day protection from any creditor action. That can be extended by a further 20 days by the directors. So you've got 40 business days. And beyond that, up to 12 months with creditor and or court approval. And that gives the business a time to restructure and weather the storm under the supervision of what's called a monitor, who must be a licensed insolvency practitioner like ourselves and some of the other partners in the Begbies Traynor Group. The moratorium debts must be met, but it gives that business the breathing space. It's akin to what they do in America, and this is the way we're going. The exit can be, it can't be rescued, it's got to close, but the monitor's decision must, the monitor is everything. Although it is debtor in possession run, like an administration, the directors remain in control, but the monitor is responsible. So it's a very responsible position, as is an administrator. But the exit from a moratorium can be a recovery of the business. It just exits the moratorium and it's back to normal. Sale or refinance of the business, a company voluntary arrangement, which we'll come on to next, or a restructuring plan, which is also in the next part. So the moratorium is there and available for any company of any size. If it becomes too tough and it needs that protection from its creditors, which some do. We've seen it in administrations. Administrations are a more extreme measure. They also brought in what's called a restructuring plan, which is very, very similar to the current company voluntary arrangement procedures under the Insolvency Act. It's to help, again, viable companies. These aren't just to stave execution and to stave off insolvency being inevitable. The court has got to sanction these schemes that are fair and equitable. The court can impose a scheme, which is the difference, on a creditor or a dissenting creditor, but not on a whole class of creditor. As long as that creditor isn't going to be worse off than the next worst alternative. So where it is different, the court can force what's called a cram down, and the creditor is forced essentially to accept, even if they're a secure creditor. It's still 75% approval for each class of creditor, as with a company voluntary arrangement. So it's available, but it's predominantly for those with complex debt structures. I don't think we'll see many. It would have to be a very large company, in my view, within the Humber region. It's expensive. Involves a lot of court procedure. You've got to be very, in both scenarios, you've got to be very, very wary and probably get a room up your funder, because there are ways funders can accelerate debt collection. But the positive is these tools are there and have been created very quickly. Not wanting to sound negative about insolvency, but in the worst case scenario, there is hope, and there are these rescue procedures now implemented alongside the current procedures under the Insolvency Act, the administration and CBA, that are there. The government also relaxed wrongful trading rules within the corporate temporarily within this Corporate Insolvency Governance Act. The Companies Act breaches are still there for directors' duty. You still owe that duty of faith to the company. And also your filing rules, which you need to be wary of as a company. We were given 12 months grace. That will come to an end in April 2021, depending on which side from March to the following March you fell with your filing. That's about all I've really got to say. But we do have also the spectre of Brexit hanging on the horizon as well. So people need to be very prepared, is my message. Understand the businesses, communicate, take opportunities where they are, and if the going gets too tough, take the advice that's available, use the schemes that are available, and talk to your advisors, talk to your lenders. There are bankers, there are lawyers, there are accountants, there are other business owners on this webinar. Talk to people, talk to suppliers, engage and collaborate. And the UK economy is extremely resilient. It may not look the same. It will not look the same, actually. Certainly city centres will not look the same coming out at the end of this. It's common sense, but they will come back and it will just look slightly different. And that's sort of my take on it.
Okay, thanks, Andrew. Thanks. I'm just conscious of time. I have had one question come through, which is to Andy Barber. Andy, still awake there? Good. How much consolidation have you seen in the charity sector so far, and do you see this accelerating?
Yeah, I'll just put an answer back in the box, but
you do that? Okay.
Quite a lot of
tell us
that.
What it was.
Yeah, we've seen quite a lot of conversations already happening between trustee boards and also leaders in organisations as well. What we need to see is it accelerate, because before COVID we had a problem with duplication. But what we also had a problem with was funders funding new organisations because they were new, rather than looking at reinvesting into organisations that were already being successful. So one of the questions that we're seeing funders ask now, and we've been asked ourselves, are you working in partnership with? Have you considered working in partnership with? And we secured some funding on the basis that we worked in partnership with one of our major competitors. If you was looking at it from a competitor perspective, the funder said, if you're working together, then that's making our funding go further. So, we've got to do that more. We've got to accelerate it, and that needed to happen before COVID, and hopefully this will encourage that even more.
Yeah, I think the message from today, from everybody, thanks to all of you for talking about the stuff that we've been dealing with. It's a collaboration. It's like working together. And I think, as one of you did say, it's quite new to us all to work, even our competitors in some respects. It's an environment that we're all sort of working together. There will be casualties. Andrew, thanks for that stuff there, because there's lots of things that people can do. But I think the message that I have, the conclusion really, is people that are seeing trouble on the horizon need to act now. There's no point waiting for the government to do things. We've got to work with what we know and then assume that you're going to get through this. You've got to work hard at it. And the people in the leisure sector and the hospitality sector have got a lot to do. And, if you're in that sector, you need to get advice fairly rapidly and get ready for the next 6 to 12 months. It's going to be a rocky ride. But however, there's lots of good news out there as well. We have lots of clients doing well.
Yeah.
People are very, very adaptive, and I think that's a testament to the quality of the people in this region. So, any more questions? We've got one just come through. Last one, and then we'll close down. In order to expand or improve product investment is essential. What criteria do you have for levels of capital borrowing? Pete, I'll put you on that one. Quick 2-minute answer, we'll go around the board.
So, I mean, to be honest, the market we've been in at the minute has been very, very strange with Sybils. So it's a bit skewed at the minute. I mean, probably the answer there is if you think you need something, get in quick with regards to Sybils before the end of the month to see what you've got, see what you can get. I've been surprised, if I'm honest, with some of the ones that have been able to get the money. So I think if you asked me that question 6 months ago, it'd be easy. But at the minute, who knows? Who knows?
I mean, Gary, you've been sat there listening to all this. If you had to go out to borrow a load of money at the moment, what sort of criteria would you put behind it, just out of interest?
In what respect? What do you mean?
What would be the necessary reason for doing it? It says for improvement or for product improvement. Would you be brave enough to do that at the minute?
Yeah, I think we're going to be doing some of that, if I'm honest with you. Looking at the order books we've got into next year, it's all positive. So whilst we're not going to follow it right through, it'd be interesting to see what we clearly need to see what the next year brings.
Yeah, we think they've got an R&D grant availability, so there's that sort of area to look at as well, isn't there?
Yeah,
so
we're already on with that, yeah.
There's lots out there. I think it could be exciting times, but with a bit of a cloud on the horizon, I think.
So Mark, can I just come in there? Just say, if you're supporting a charity, if you're a trustee or so on as well, thinking about lending as well is another aspect. So obviously there was the loans that you're able to get through, the 2% loans, interest free for a year. We encourage a lot of charities to go for that. The 2% interest rate is far cheaper than the time that you'd spend on trying to fundraise for that amount of money. And that give you, going back to that cash is king, give you the ability to look at how you can change your organisation and how you can make sure you're more resilient. So I would encourage, that's one thing for charitable trustees. If anybody's a trustee on this call today, is have we looked at that? Have you as an organisation looked at those options as well? Because you might have a fundraiser or volunteer working incredibly hard to raise a small amount of money, which is costing you more money to get than that opportunity. So things like that as well is always, open for charities to explore as well as businesses. Yeah.
Any further comment, Andrew, before we finish on that? People overborrow, presumably.
I touched upon it. People may see opportunities to acquire businesses, to tag them on to actually bolster the turnover. I mean, there's opportunities to take equity, and there's private equity out there too. So there are a multitude of financial options available, but you don't want to be overgeared, is my message, and it's got to be affordable. And Andy's right, there's some cheap money. People have been taking some of this cheap money to repay more expensive money. So every business is different. They've just got to understand what they can afford, and affordability and security may or not be an issue going forward with regard to if revenue really do get the Crown preference coming in December 2020, which, that's not ideal timing.
Right. Okay, everybody. Well, it's well past our 45 minutes. Thanks for your attendance. Thanks for the panellists. Been very, very informative. And hope to see you on a Smailes Goldie TV webinar in the future. Thanks, everybody. Bye for now.